Today, we continue the live test of EUR JPY Strategy Number One on the 10-minute chart. This is day 4, and once again, we will allow the market to choose the direction while we concentrate on disciplined execution. The trading session begins at 12 a.m. London time. At midnight, we mark the opening price of the 10-minute candle as our first reference point. In today's chart, that reference is around 184.604. From this reference level, we place two opposing pending orders. The buy stop order is positioned 15 pips above the reference, around 184.754, while the sell stop order is placed 15 pips below, around 184.454. Both orders carry a 30 pip stop loss and a 60 pip take profit target. Once one order is activated, the opposite order must be canceled immediately. If the trade reaches plus 30 pips, the stop moves to break even. If it reaches plus 40 pips, the stop moves again to protect 20 pips of profit, EUR. We know our entry levels, we know our maximum risk, and we know our final target. There is nothing to predict. Our only responsibility is to wait. The market begins trading close to the reference point. Price moves slightly upward, pulls back, and then starts building bullish momentum. We can now see the candles approaching the upper pending level. Price touches the buy stop order, and the first long position of the day is activated. The opposite sell order is canceled immediately. Trade number 1 is now live. At this stage, the market is moving in our direction, but the movement is still limited. The price climbs gradually and reaches approximately 20 to 22 pips of open profit. This is encouraging, but it is not enough to adjust the stop loss. Under the strategy rules, the trade must first touch plus 30 pips before the stop can move to break even. That milestone has not been reached, so the original 30 pip stop remains in place. The market begins to hesitate. The bullish candles become smaller, and price starts moving sideways. We can see that buyers are no longer pushing with the same strength. A pullback now begins. Price moves down toward the entry level, briefly attempts to recover, and then turns lower again. The movement becomes increasingly bearish. This is where discipline is essential. We do not close the position simply because the market is moving against us, and we do not widen the stop loss to give the trade more room. The original plan remains active. Price moves below the entry and returns toward the reference area. The trade is now showing an open loss, but the protective stop has not yet been reached. The market makes several attempts to recover, but each upward move is rejected. Sellers continue to apply pressure, and the overall direction remains negative. As the morning develops, the decline becomes stronger. Price approaches the 30 pip stop loss level. There is still no reason to interfere. The risk was accepted before the trade was opened. The market now touches the protective stop. Trade number 1 closes with a controlled loss of approximately 30 pips. This is not the result we wanted, especially after the position had previously moved more than 20 pips into profit. However, the market never reached the plus 30 pip break-even milestone, so the stop could not be adjusted. The loss is therefore completely consistent with the strategy. One of the most important lessons from this first trade is that open profit is not the same as secured profit. Until the required management level is reached, the original risk remains active. The first trade is now finished, and we do not enter another position immediately. According to the strategy, we wait for the next fully completed 10-minute candle. Once that candle closes, its closing price becomes our new reference point. The market has now fallen significantly, and the new reference is marked around 184.161. From this updated reference, we place another OCO pair. The new buy stop order is positioned approximately 15 pips above, around 184.313. The new sell stop order is placed approximately 15 pips below, around 184.008. Both pending orders again use a 30 pip stop loss and a 60 pip target. The second setup is ready. Immediately after the first loss, the market experiences a strong bearish move. Price falls sharply and approaches the lower pending level. However, the sell order is not activated. The market stops just above the entry area and begins to recover. This is a good reminder that coming close to an order is not the same as triggering it. Until the exact pending price is touched, there is no active trade. Price now starts moving upward. The recovery becomes stronger and EUR JPY returns above the new reference point. Buyers continue to push the market higher and price begins approaching the upper pending order. The buy stop level is reached. Trade number 2 is activated and the unused sell order is canceled immediately. The second long trade is now live. Unlike the first position, this trade quickly begins moving in the correct direction. Price rises above the entry and continues building positive momentum. The candles are producing higher highs and higher lows. Buyers are clearly in control, and the open profit begins increasing. Price now reaches plus 30 pips. This is our first major management milestone. The stop loss is moved from its original position to the exact entry price. The trade is now protected at break even. If the market completely reverses from here, the original 30 pip risk has been removed. The upward movement continues. Price now reaches plus 40 pips of open profit. According to the strategy rules, the stop loss is moved again, this time to secure approximately 20 pips. The position can no longer become a losing trade. Even if the market reverses sharply, the protected stop should close the position with a positive result. This is a major difference between the first and second trades. The first trade never reached the management milestone and remained exposed to its original stop. The second trade has now reached both protection levels and has locked in profit. EUR JPY continues advancing through the afternoon. There are several small pullbacks and periods of consolidation, but each decline is followed by renewed buying pressure. The trend remains positive. The position moves beyond 40 pips and approaches approximately 50 pips of open profit. The full 60 pip take profit target has not been reached, but the trade is performing strongly and remains safely above the protected level. As the London time trading window approaches 7 p.m., the market begins moving sideways. Price is holding around 50 pips above the entry, but there is not enough momentum to reach the full target before the end of the recorded session. For today's video and spreadsheet result, trade number 2 is recorded with approximately 50 pips of profit. We can now calculate the complete performance for day 4. Trade number 1 produced a loss of 30 pips. Trade number 2 produced a profit of 50 pips. When we combine the two results, the 50 pip winner first recovers the earlier 30 pip loss and then leaves an additional 20 pips of net profit. The final result for day 4 is therefore plus 20 pips. Now let us convert those pips into euros. The starting balance for the day was 1,373 euro, and the position size recorded in the spreadsheet was 4.1. The sheet calculates the 20 pip net result as approximately 136 euros. This gives us an effective value of around 6.80 euros per pip. Using that approximate pip value, the first 30 pip loss was worth around 204 euros. The second